Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although I know there's a lot of fear and panic over the Bitcoin price drop we saw in the past 24 hours, the good news is that macro-driven price corrections like this one are the least concerning in my opinion because Bitcoin is just following the S&P 500. And you can see that very clearly when you overlay the two of them, and keep this in mind next time someone tells you Bitcoin is a risk-off asset that can do well while traditional markets are struggling. And this sell-off in risk assets like the S&P 500 and Bitcoin is driven by the recent rally we've seen in the US dollar index now that it's broken higher into the risk-off region we've had laid out for months now. And this is thanks to the very hawkish FOMC meeting we had yesterday. The market is now pricing in only one 25 basis point rate cut for 2025. When going into that meeting, the market was initially anticipating 3 rate cuts next year. And this makes sense because if we take a look at the economic projections the Federal Reserve released yesterday, we can see that in the September meeting, they told us that there would likely be 3 rate cuts in 2025 because they were expecting inflation to come down more quickly and they were expecting the labor market to weaken more aggressively, but instead the labor market remained a little bit more resilient than the Fed had anticipated, and inflation is remaining a little bit more stubborn than the Fed had initially anticipating. So it's no surprise that they're pricing in less rate cuts for 2025 as of right now. And this was the main concern I outlined in Monday's free weekly report, what inflation remaining stubborn could mean for the FOMC meeting this week and how the economic projections for 2025 could result in a large move in the US dollar index and as a result global liquidity. And thanks to that hawkish FOMC meeting and hawkish economic projections from the Fed, we ended up seeing that rally in the US dollar index, which resulted in quite a steep drop in global liquidity. So it's no surprise that risk assets have reacted accordingly. For this risk-off price action to reverse, we want to see the US dollar index roll over and exit that risk-off region, and that's going to require inflation to come down a bit more aggressively, or perhaps some more weakness in the labor market, but we really don't want to see the labor market weaken, one, because we don't want to see people lose jobs, but also because I don't think a recession would be a good outcome for risk assets either. So ideally, we see the labor market remain resilient while inflation comes down. As for Bitcoin specifically, this weekly candle does not look great as of right now, especially with this big wick to the upside, but I'm going to wait for the weekly close before jumping to any conclusions. A close back below 100K and back into our range would be the early warning sign that perhaps this is going to take longer to consolidate and correct. And I will update my likelihoods for the different scenarios of what comes next for Bitcoin accordingly, but I'm not going to do that until we actually see the weekly candle close. And it's funny how market sentiment flips so quickly. Earlier this week, people were talking about 200K per Bitcoin, the US strategic reserve, nation state adoption, Michael Saylor infinite money glitch. And once we see a bit of a correction, we see sentiment start to cool down aggressively, but there's still a lot of things to be optimistic about over the next few months. We have the Bitcoin ETFs flipping gold funds in AUM, which is absolutely insane when you adjust for the fact that the gold market cap is about 9 times the size of Bitcoin's market cap. So for the Bitcoin ETF and derivative products to already have $129 billion in AUM is quite insane and shows you the demand for this asset. We also have Ohio following in the footsteps of Texas and Pennsylvania with the discussions of a Bitcoin strategic reserve and buying Bitcoin. I don't think these are the best prices to buy Bitcoin. I think it would be better to have tax incentives for those constituents to perhaps save money by paying their taxes in Bitcoin, but we'll see how this ends up playing out, but it's a good narrative regardless. And we continue to see the major US-based Bitcoin miners hodling their Bitcoin and reducing sell pressure, and even using debt and convertible note offerings to buy more Bitcoin than what they can just mine directly. And we're still seeing solid ETF inflows. Even yesterday with all of the FOMC drama, we still had a positive inflow day for these Bitcoin spot ETFs. So for now, I remain optimistic that we still have higher to go in Q1 of 2025. But as always, I'm open to the other outcomes if data or the environment were to change. And there's always concerning things to keep an eye on as well. We're still seeing a lot of long-term holder selling, the most we've seen since the capitulation bottom in December of 2018, when a lot of long-term holders were giving up hope and panic selling. And the time before that was on our way to the blow-off top in 2017, when a lot of long-term holders started taking profit because they were up so much since the bear market lows. So maybe we're seeing something again this time around, like we saw in early 2021 and like we saw in late 2017, when long-term holders started locking in profits as Bitcoin rallied into its blow-off top. And another concern I'm watching is the weakness in the MicroStrategy chart. We saw something similar last cycle where MicroStrategy had an incredible blow off top, but Saylor used the stock to buy a bunch of Bitcoin, and Bitcoin topped soon after as a lot of that money piled into Bitcoin. Are we going to see something like that this time around? This big wick to the upside and blow off top with the NASDAQ addition rumor is something that concerns me a bit, but we'll have to continue to monitor MicroStrategy's price action to see how that ends up playing out. As for my portfolio, no changes made since the profits I took Monday morning that I went into detail with on the weekly report. I took some small profits across all my holdings on Monday, even though it was very hard to because everything looked so bullish, but taking small profits along the way is the best way I have found to manage my emotions and not be too stressed out whenever we see a pullback, because I'm taking some small chips off the table at much higher prices. So if the market goes a lot higher in Q1, I'll be quite happy because I still have 70% of my portfolio in safer spot holdings. But if we see some type of black swan event and the top is already in, I'll be very grateful for the small profits I took along the way. Because although I know a lot of people are aiming for significantly higher Bitcoin prices like 300K, 400K, and 500K, 100K per Bitcoin is still quite expensive to me in 2024, especially because not 12 months ago we were able to buy it closer to 30,000. So a lot of investors are sitting on long-term gains they might want to lock in a portion of, and that's no surprise after the incredible performance we've seen this year for Solana, Bitcoin, and Ethereum. And speaking of Ethereum, we're seeing another correction off of the 4K region that has already been resistance 5 times. What I'm sure is happening is a lot of people are piling into leverage to try and time the breakout, and the market makers and Ethereum whales keep punishing them with corrections over and over and over again. But I do think Ethereum breaks higher in Q1 of 2025. And we have the perfect narrative and backdrop for it to do so. One, we have Bitcoin at a very high 6-figure price point, which is going to make investors look at the next cheapest asset, but also because of these Bitcoin and Ethereum combo funds that we're expecting to go live next year, which will make it very easy for investors to index this market by buying both Ethereum and Bitcoin in an efficient market cap weighted vehicle. So I think that could bring a lot of inflows into Ethereum as investors just passively buy those funds to get general exposure to the asset class and not just Bitcoin or Ethereum individually. And we're still seeing great demand with the Ethereum spot ETFs. Again, perhaps because Bitcoin has been so successful, many investors are trying to buy the next thing that could perhaps have a big move and a big rally. And even if you don't agree with that logic, that's just how human nature tends to work. Most people feel like they missed Bitcoin at its current price, so they're happy to buy what they believe to be the next best thing. And as of right now, that's Ethereum, especially when they're getting pitched these higher price targets like 10K per Ethereum, 15K per Ethereum, because it's very hard to imagine Bitcoin doubling or tripling at current prices, but it's still very reasonable for investors to expect Ethereum to double or triple at its current price. As for Solana, it's trying to hold above our previous range high for dear life. You would expect a bounce here, and then the real moment of truth is whether we fall below that level and have a deviation, or if that bounce ends up allowing us to break into price discovery. Of course, a lot of that is going to depend on what Bitcoin does and how Bitcoin ends up closing its weekly candle and whether we see a deviation for Bitcoin. But as of right now, I remain optimistic on Solana because it's one of the majors alongside Bitcoin and Ethereum. I still think it will do well if they do well, especially if we see more appetite and excitement surrounding a Solana ETF, because I would expect it to be the next in line for an ETF aside from some of the older projects, but we'll have to wait and see how that develops next year. As for traditional markets, pretty ugly drop for the S&P 500 this week thanks to that Fed meeting we discussed, and it's no surprise that that quick correction ended up carrying over into Bitcoin. But the traditional markets headline that really caught my attention this week was President Biden proposing a ban on congressional stock trading. We know that politicians don't do anything out of the kindness of their hearts, and we know the Fed banned themselves from stock trading somewhere around the 2021 top, right before they went on the most aggressive rate hiking cycle ever. So are we going to see Congress ban themselves from trading stocks in Q1 of 2025, which would align very nicely with that Bitcoin cycle top scenario? And would also be a very concerning sign for traditional markets that after decades of extracting money from the stock market with their insider information, Congress is deciding to ban themselves from trading stocks after a multi-decade bubble. And will that align nicely with them deciding all of a sudden they have to do something about the national deficit? And what could that mean for the trend we've seen over the past few decades, and what that would mean for the money supply alongside the national debt, and what that would mean for the S&P 500 in the long term and Bitcoin in the long term. So this is a narrative I'll be watching very, very closely, and I will change my approach and my portfolio significantly if we were to see a approved Congress stock trading ban. But as of right now, it's just an idea being thrown out by Biden, and we'll see if it actually gets through Congress and actually gets approved. But if it does get approved in Q1 of next year, I do not think the timing is a coincidence whatsoever, especially with the stock market bubble we've seen and enjoyed since the great financial crisis. So I will be paying attention to that outcome very, very closely. But as always, let me know what you expect. What did you think of the FOMC meeting, and what do you expect for global liquidity and Bitcoin over the next few months? As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.